I'm Jim Jubak, and welcome to my Trend of the Week video. Watch for a global liquidity shock. When they talk about playing a game, they say it's not whether you win or lose, it's how you play the game. There's a roughly analogous saying, which I'm making up, for the stock market, which is not whether the market goes up. It's not just whether the market goes up or down, it's how it goes up and down. And what we're seeing right now is a market that's doing really big moves in what are normally pretty stable markets. And that's because we're seeing a real lack of liquidity in market after market. The shock over the last weekend was that Equinor, the big Norwegian natural gas company, came out and said, hey, you know, there's a real liquidity shortage in the trading market for European energy. European utilities have about 1.5 trillion in margin calls they're looking at, and there's not enough cash around to cover all of that. These companies are really looking at being unable to cover trading positions, people being worried about their being able to trade trading positions, cover trading positions, which is even worse, because if you get worried about it, you then overinterpret any bad signs and you sell or you buy, and you get big shocks in the market. The European Union countries are aware of this. They're providing liquidity to this market, which again tells you how bad the situation is. When Equinor started talking about liquidity in the energy market, it called it a Lehman Brothers moment. You remember Lehman Brothers? It was the firm that went bankrupt during the global financial crisis set off by the crisis in the US mortgage market. So what Equinor was really saying is, hey, there's no liquidity. We're looking at a moment where asset prices go really bizarro. European governments are aware of this. The German government has created a credit facility for German utilities, about 7 billion euros in loans available to strapped utility companies. Over the weekend, Finland and Sweden did the same, providing about $33 billion, a $33 billion facility that happened a few days ago. So this is a real crisis. The problem I have looking at this is that I don't think it's just limited to European liquidity in the energy markets. A number of commentators in the US have talked about, well, the Fed is starting to pull $95 billion a month out of the treasury market. Is there enough liquidity to cover that? We don't know. All this means that you're going to see more volatility in the market, more big moves in even stable markets like treasuries, and that's going to, frankly, has the potential, at least, for freaking people out. This is Jim Jubak. Thanks for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. If you want more of me and market commentary, go to my free site. That's got 3 portfolios. That's jubakpicks.com. My paid site has 6 portfolios, and we're doing some ETFs and shorting, things that really I think are appropriate for this bear market, and that's jubakam.com, and you find links to those both down below. Thanks for watching.